Now, the Reserve Bank of India, the RBI, has emphasized fairness in penal charges on loans. Now, it has mandated that charges should be reasonable and that they should be unbiased. Lenders are now required to establish board-approved policies for such charges. But what about the debtors? How is this going to impact home loan borrowers? We are taking a look at social media. According to the responses that we've been getting on a poll that we conducted, just to understand how home loan borrowers are reacting to this move by the RBI on penal charges and on penal interest, it turns out that about 2/3 of the respondents think it's going to bring some amount of relief. It indicates how they are welcoming this kind of change. Of course, we'll take this up with our experts. Our guests are joining us on the show to decode the RBI's move. But first, here's this report that my colleague Ankur Mishra has filed about what the RBI intends to do, bringing about a sense of fairness as far as borrowers go when it comes to penal interest that they used to pay and how they're defining penal charges. Here's the report.
Yes, Reserve Bank of India has issued a final circular on the penal charges which were levied by the various regulated entities of Reserve Bank of India. It was found that these penal charges were not uniform. In fact, many of the banks were having their own kind of norms for penal charges, which consumers were facing. Sometimes it was observed that in various NBFCs particularly that the complaints were there that the charges are more than even the interest rates. So now the Reserve Bank of India is saying that there should be a board approved policy for penal charges. They should be well defined. In fact, there should be proper disclosures. For instance, Reserve Bank of India has directed that it should be a norm by the lender that every time a penal charge is supposed to be levied, it should be communicated properly to the customer beforehand with proper communication. So all these directions has been given by Reserve Bank of India in the directions which needs to be effective from January 1. And the most important point here is that anytime the penal charges should not be more than the interest rate itself, and that has been directed to the banks. Now, as far as the applicability is concerned, it is supposed to be effective from January 1, but it will not be effective for credit cards where different norms would apply.
So that's as far as the RBI's moves are concerned when it comes to bringing about a sense of fairness when it comes to penal interest. Now it's not going to exist, but penal charges do. Let's understand the implications of this. Raman Aggarwal, director at FIDC, which is the Finance Industry Development Council, a representative body of NBFCs, is joining us. Mr. Aggarwal, good to have you on the show. And like I was telling our viewers, the RBI has said that the quantum of penal charges should be reasonable and commensurate with the non-compliance of the loan contract without being discriminatory within a particular loan or product category. So in a sense, you tell us, going by what the RBI is directing over here to the lenders, how much do you think this is going to ease the burden on home loan borrowers?
Good evening, Vikram, and thank you for having me on the show. If we look from the borrower's perspective, obviously, from their perspective, it's a welcome move, more from the perspective of bringing in some kind of a standardization. So as your report also rightly pointed out, that there was no set formula or a set pattern, and each regulated entity was following its own course when it came to the levy of penal interest, right? So to that extent, there is some now a standardization. We all know how much can it be charged, and therefore, from the borrower's perspective, it is kind of a welcome move. However, I think we need to understand in a holistic manner. So if you look at from the lender's perspective, there is one major shift in the way RBI has defined it. So let's appreciate the fact that the penal interest originally, and the draft circular was issued by RBI way back in April 2023, post which we at FIDC as the representative body of NBFCs had represented. So let's understand penal interest by its nature is representative of two key parameters. One, the time value of money, and second, the higher risk assessment owing to the default in repayment of the loan. Now, the moment you say a penal charge and not an interest, you are basically changing the whole nature of this charge or levy, whatever you may call. So earlier, being interest, it was directly related to the time factor. That means how much delay is there in repaying, or what is the period of default. So proportionately, the amount was calculated. Now, the moment you say it's a penal charge, so it's a fixed charge. And by changing the nature from interest to charge, there is going to be a direct impact in terms of the levy of GST. The moment you call it a penal charge, that means it's become a fee, there is going to be a levy of GST. So let's appreciate that this penal charge, along with the applicable rate of GST, will have to be paid. And this, we are talking in case of a borrower who has defaulted in repayment. So to expect the borrower to repay this penal charge along with the applicable GST is going to be a tough ask to my mind. And it's going to be a challenge to recover that GST.
Why do you think it's a challenge? Why do you think it's a tough ask? Is the total amount that would likely be paid, would it exceed what was being paid as a penal interest?
No. So it's not a question of being exceed that. So let's appreciate, and let me tell you there is one difference here. The penal interest which was earlier, levied or charged was not recovered immediately. It was more kept in what we call as a memoranda account. That means whenever there is going to be a final payment made or a settlement made, this amount is going to be recovered. And in many cases at the time of settlement, this interest was waived or even heavily discounted for. All this will not be possible because now it's a fixed charge along with the GST. Once you levy that charge and pay the GST, you cannot alter it. So this concept of flexibility also goes away. I think that's where we at FIDC has suggested, while we fully appreciate the RBI's concern from the borrower's perspective also, so there could be a standardization brought in without disturbing the nature.
Right.
It should remain as an interest, remain as a component of the time. However, there could have been a standardization by way of bringing in a cap. As the report just mentioned,
A cap
it could
on
be, we could have
the
said
penal
that,
charge,
okay,
you mean?
Yeah, so,
You're right.
so now it's a charge. Earlier it was interest.
Right.
And what
No,
we
so
are
the
saying
cap
is,
that you are suggesting, where should that cap be, you were saying?
so the cap should be on the interest itself by way of, you could say, okay, that the rate, see, earlier what was happening, the rate of penal interest was much higher than the contracted interest rate.
Right.
So RBI could have said, okay, the penal interest cannot be charged at a rate more than what is the contractual rate. So you cap that and you bring in a standardization.
Right.
But the moment you call it a charge, the whole nature gets changed.
Yes.
And there is a lot of
About
other
the larger
implications.
perspective that the RBI is bringing this in for. Do put that in perspective for us as well. The RBI has said that these charges are to encourage financial discipline, not to raise additional money by the lender. So in a sense,
Absolutely.
it was raising money for the lender. And that is what the RBI wants to put a stop to. Are they going to be able to do that by putting in penal charges? Is that at least getting accomplished?
Yes, so that is accomplished, certainly. But what we are saying that the same could also have been accomplished by retaining the nature as an interest and capping it. So because when you change the nature, there is collateral
that point
issues
I'm taking.
which will crop up.
I take that point. But what was the trigger for this, sir? I understand that many regulated entities, basically lending institutions, regulated by the central bank, they were levying penal rates of interest over and above the applicable interest rates in case of defaults or non-compliance by the borrower with the terms on which these credit facilities were actually sanctioned. So why was that happening in the first place? Why did the RBI need to bring this in?
See, I'll tell you, in the absence of any directive from RBI, this field was left open and grey. Obviously, each lending institution took its own call and they had a own prescribed rate of penal interest. Now, this varies dependent on the risk profile of the borrower. So sometimes, in case of, say, an unsecured loan given to an individual, where the risk profiles are higher, the rates of penal interest were also higher. But yes, I agree that the fact that since this penal interest in some cases were higher than the contracted rate of interest. There was a need. That's why I said, to that extent, we fully agree and appreciate with RBI's viewpoint. There was a need to bring in standardization. There was a need to bring in some kind of a sense in that. So that is very much appreciated.
How much do you think the impact is going to... Yes, but do help us understand from the lender's perspective, since that's what you started with. Mr. Aggarwal, if you can put in perspective for us, how much damage is this going to do when it comes to profitability over at lenders?
See, I will say to the extent when you say damage to the profitability, certainly not a big damage, because not that, I can speak for NBFCs for sure, not that NBFCs were making huge amounts of profits out of these penal interests, but yes, there will certainly be an impact, because as I said earlier, it was the field was wide open. Now it's a fixed fee, but that too, more importantly, a fixed charge. Earlier it was directly related to the time component. So as the period of default increased, so did the interest rate. Now it's a fixed charge for a certain defined period. So to that extent, yes, there will be an impact on the overall, I would say, revenue collection. But if you say a much damage to the profitability, I think that is stretching it a bit too far.
And compliance is not going to be a problem, right? Very quickly, sir.
No, see, compliance, one issue we need to appreciate, because RBI has also said that even this will apply to the existing loans.
Right.
Now, let us appreciate majority of the loans which are given are fixed rate loans. Now, to levy, to change the nature in the middle of a loan tenure is where it's going to cause issues. That is where the impact is also going to be felt. So I think if at all it is to be done, it should be done only for fresh loans and not for existing loans.
Mr. Raman Aggarwal, Director at FIDC, many thanks for joining us with your perspective on this important story that we are tracking. Thanks indeed for joining us with your perspective tonight.
Thank you.